Okay, hi guys. Excuse me. Welcome to the FX Street webinar. My name's Ian Coleman. I'm going to be your host for the next 60 minutes. I'm one of the traders and analysts at First for Trading. Okay, we supply analytical reports on FX majors and trade recommendations for the UK Open at 7 o'clock. There's been obviously high volatility in the currency markets lately. There's been some consolidation patterns. There's been aggressive moves, obviously last Friday to the upside, with most currency pairs selling into the dollar. And it's been, if you're using trend indicators and purely trend indicators, it's been hard to catch the moves. Okay, so what we're going to look at today is going to look at some scalping techniques. We're going to look at price action. We're going to look at fib levels. We're going to look, more importantly, at market profile. Okay. Some of you may not have seen market profile before, and I'm going to try and explain to you how I use it. Whether I use it correctly or not, I don't know, but how I use market profile, how I use it to gain short-term entries, scalp trades, and target levels. Okay. In its rawest form, market profile gives us what we call a POC, a point of control. Okay. It's based around 30-minute time frames, with different letters denoting the different 30-minute time frames. It's been around for quite some time, about 12 years. There's a very good book that you can read on market profile called Mind Over Markets, but it is quite intense. Okay, what basically market profile tries to do or does do, it shows us where the smart money, okay, the bank money, is happy to see a currency pair trade, and it also shows us where 60 or 70% of the trading for that day is confined to. Okay, so we're going to look at all of this. We're going to look at how to trade it. Basically, there's three different types of day according to market profile. Okay, there's a trending day. We all know what one of those looks like, Friday, for instance. There's a double distribution day, okay, and there's a non-trending day. And a non-trending day will basically move around the point of control in between this 70% area. Okay, and it's very good for scalping. Okay, first of all, I'm going to talk about the charts that I've got. These are CQG charts. Basic candlestick chart. I've got two moving averages on here, or exponential moving averages. I've got 15 EMA and 62 EMA. For you guys that have seen or listened to any of my webinars before, you know that I use these because I'm quite fanatical about fib levels. Okay, so they basically are my moving support and resistance levels. I do use trend lines, but what I have a tendency to do is look more to these moving averages to denote support and resistance. Okay. We're also going to talk about Marabuzos. Marabuzo levels are basically, on a strong move, a Marabuzo level is 50% of the open and the close. Okay, not the full range of that candle, but 50% of the open and the close. And as we know, through trading with fibs, okay, 50 and 61.8% are obviously the prime levels that the markets tend to move around. So the Marabuzo level is quite important. And when we get confluence of these different support or resistance levels, they've been worked very well for scalp trades, for building long or short positions. Okay, so what I'm looking for, what I try and do, is I try and decipher where these support and resistance levels are. I then look to build long or short positions on chart formations, okay, on price action around these important levels. What I'm looking for in particular, I'm looking for inside Arami candles, which I know George was talking about previously, and outside bars. So an outside bar is completely different than an inside Arami in the fact that it's a complete change of investor sentiment. Okay, so euro dollar, obviously everybody's favourite pair. We're going to concentrate on that one to start with. We're going to look at some forecasts as well towards the end if we've got time. Okay, so the reason I've got the cloud on here, I don't use it down into shorter time frames really, but I like to see where support and resistance is coming on these larger time frames. Okay, while you're inside the cloud, the bias is still to the side that the cloud, that the price action moved into. So here on this euro dollar, okay, price action has moved into the cloud. The bias is still to break to the upside. Okay, it's only until she breaks through the downside that the bias changes according to cloud formations. Okay, these lines here I can put on my chart. These are my blue line is my point of control. Okay, and this is where the majority of price action ended on Friday. So this is obviously Monday's point of control, and the where 70% of the price action ended yesterday. And what happens is markets will move around these levels. Okay, I'm just going to get a drawing tool up and running so that we can use that to highlight things. Can move it over. I'm feeling a little bit worse aware, not self-induced, but if I quickly go off the mic today, you know why, and I'll be back as soon as possible. I'm just going to refresh this chart just in case it's gone a bit funny. Okay, so let's go back to the daily. So I'm going to move the cloud off, and I'm even going to move this moving average. Okay, so here on this strong move up on Friday, we've got a Marabuzo level coming in here. Okay, so we want to note these levels on our charts. Okay, comes in at 125.52 as an area of support. Okay, so we want to note all these different areas of support and resistance. We've also got a Marabuzo level here, actually, from yesterday's price action. So then we break it down through time frames, because remember we're looking at short-term scalps here, not long-term moves. What I have a tendency to do, if I've got a view, then what I want to do is I want to scalp into a trade, or try to scalp into a trade with my view, and then I want to try and run or bleed a proportion of that trade. Okay, so just coming back into sound money management, we're looking to get in cheaply, get some off to bank some profit, okay, and then run the balance. Okay, please do interject as much as possible. So going down to the 240 time frame, I'm just going to put my moving average back on. I can find it. Okay. So going back to the 240 time frame, talking about reversal signals or bars. Okay, inside bar here down along the bottom, and then a bullish outside candle. Okay, and that was the start of this move up. Now it can be counted in 5 ways, but it's not really the wave pattern that I'm looking at. It's the aggressiveness of that move higher. Okay, so a strong move up, an impulsive move up, and then looking for a corrective sequence to try and gain more long entries to the upside. Okay, obviously the weekly chart, talking about a bias. Okay, the weekly chart was a strong rejection of lows. Okay, so it showed that we've got this area of support here, 125.52, where price action It's been rejected 3 times in the last 3 weeks. Okay. So getting back onto our 60-minute chart. So just messing you about. I'm just going to go on to 240. So how do we know when the upside or this overbought extreme is going to reverse and correct? Well, we've got our first signal here, and what George was talking about, an insider army. Now that basically shows investor indecision. Okay, then we break the low side of this insider army and we close below. Okay, that level then becomes resistance. So it was support, it then becomes resistance. Bearish outside bar. Okay, and then we move to the downside. But then yesterday we get this insider army again. So when we're breaking down again through time frames, back onto a 60-minute chart. Okay, that consolidation period forms a symmetrical pattern. Okay, so a symmetrical triangle formation after a strong move down has a bias to break to the downside, but it's only a slight bias. Okay, then we break and we move higher. So why did we pause or reject this high this morning? Well, just clear this again. Maybe I won't use this drawing tool. We then want to use our fib levels, okay? So we use our retracement tool and we pull it down to the low, and we can see that this corrective move up moved to 38.2%. So just move the rest of these lines off so we can see it better on shorter time frames. And then we want to be breaking it down, okay? So we want to be looking at market profile, okay, and price action within this choppy period. And it has been very choppy today. We had a strong move lower, then we had a move back up, then we had an inside bar, then it tried to break this this lower level, okay, around 125.80, and then we've rejected off it. So we can get some scalp trades in here. So then we want to break it down into 5-minute time frames. And we want to be looking for reversal patterns. Now, the reason why I use these exponential moving averages and the RSI with a 15 setting, okay, is because it gives me a bias, okay, and I want to be trading with that bias until I get a decent reversal candle that tells me that that bias has changed. Now, I know we're not around, or I get up at 4:30, so I come into play around here. But these moving averages just continuously trend to the upside, okay, and we can see that we use, and this is in all time frames, we use these EMAs as support and resistance. So it keeps on breaking to the upside, and we get large engulfing candles in between price action, okay, until we reach this level, okay, which is a 38.2. Now, I'm then looking for signals that I should be getting short, and I don't get any. On a 5-minute time frame, I haven't got any, okay, and on the 10-minute time frame, I still don't have any signals to get short. And what happens is that this develops, okay? So this is the point of control. This is basically the blue line is where smart money, if you like, is happy for euro dollar to trade at, okay, around 125.85. This denotes the top of the range, or where 70% of price action has been today, and this denotes the bottom of the range, okay? Excuse me. And you can see that we can get decent bounces off these support and resistance levels. So the market moves down, we engulf, move to the upside, but we don't make a higher high, okay? Then we move down and we use the lower range of this market profile and produce a bullish outside bar. Okay, what I try and do on a bullish outside bar in a 5-minute scalp trade is I try and get my entry level on the Maribuzo. So again, just highlighted here on these charts, a small pink line is the Maribuzo level. So that is my trigger, okay, and my stop, depending on how confident I am with the trade, is either placed below the low or, as the mark dictates, okay, you take the length of the trigger candle, which is here, okay, and then you use the length of that trigger candle for your stop, and of course your profit target should be 1-to-1, so your profit target is up around here. Now if we break this down again, so remember this is our point of control, we can use this all the way down into a 1-minute time frame, okay, because remember we're looking for scalp trades. Click this off. And I am long, by the way, in euro dollar 85. I know George was saying that I think he's probably right, if we break this level then we could get a strong downward move, but because I have that support, okay, then I'm still looking for bullish price action going back up. And just to digress a little bit, okay, where was my signal? Well, my signal started here. This is my support. My signal started here when I get this inside Arami candle, okay, near my support, near my Maribuzo level, okay. I actually bought some last night. I'm still holding along now. I bought some euro yen last night and cashed that in this morning. I'm probably going to put that back on soon as well, if we get a decent break to the upside. So I'm not ignoring this bullish price action. What I'm trying to do, I'm trying to build long positions on the pullback, okay? So going back to 1-minute chart, okay, I'm not the best scalper in the world. I'll be the first to admit that, and that's why I don't try it that often. But what market profile shows us basically is if price action stays within these parameters, okay, then this is a non-trending day today. Okay, it's a consolidation period, and you can see that in the daily chart. Okay, the daily chart is showing a very small range at the moment in comparison to the large moves that we've had lately. So basically, what market profile is showing us is that out of these 3 different types of day that we can have, okay, the trending day, the double distribution day, and the non-trend day, today is a non-trend day, okay? Market, smart money, is happy for price to fluctuate between these 2 areas. Let's just go back to the 1-minute chart. When I expect aggressive moves this week, that might turn out to be a boring one with new quarter, 4th of July, ECB, B of O rate decision, non-farm. Is it still worth scalping? Well, I think when you have these consolidation periods, that the best move is to scalp. I'm not a great believer in scalping, because I prefer to try and get the larger moves, obviously. But with, as you say, choppy price action and so many traders waiting in anticipation of all these different economic releases that we've got this week, it could be very light volume. It could move very quickly on any news-driven scenario, and I think just to try and get very short-term trades or very short risk trades on, with your view is really the best way to be. I've still got a bullish view in euro dollar, okay, so I'm not looking to scout these shorts off these levels. What I'm trying to do, I'm trying to pick longs, okay. I'm trying to get in, get some off, get my stop loss to entry, and then get up, okay. I'm going to show you a proper market profile chart in a minute, because this is actually a market profile chart on a candlestick chart. Solomon's just saying, how do we determine the market profile? I don't understand. It's automated, okay. I don't put market profile on there. These are CQG's charts, okay. These professional charting package that offer market profile as an added extra. If we know the market is moving within 20-30 pips, if we trade £5 per pips, will this be a good trading opportunity? Yes, but I'd still look to leave some on. I'm still a believer in trying to bleed some of the trade, okay, with my view. My view might be wrong, and I might end up coming out of the trade flat, but at least I've given it a chance to move with my view. And we can see here, talking about whether or not this is a trending market. If this was going to break to the downside, then this move, if this was wave 1 down here, okay, and this was wave 2, then this move here should have been aggressive and should have broken these lows. Okay, so what I believe that we're having is a consolidation period with corrective moves. Okay, and corrective moves are in 3 waves. We've got 1, 2, 3, 1, 2, 3, 1, 2, 3. And I think that is a 3-wave correction down to the bottom of the range, basically. So I'm not waiting for it to get down to 125.52 because I don't think it's going to get to that level. And obviously, if we look to the hourly chart, okay, we know we've got strong support here. Price action has failed. Forget about market profile, but for the last day, it's going to nearly be 24 candle bars there. Okay, price action has failed to break through 125.74. And we can see that here. Okay, so it's just underneath our range, if you like. So getting back to talking about scalps. Okay, what we want price action. Okay, so forget about the moving averages, forget about the cloud, forget about the RSI. Okay, what we want to see is we want to see price action around these levels. Okay, where the market is happy to see us trade. So here, this morning, again, we want to be looking for these not aggressive, but for these outside bars. So we get an outside bar here. Okay, it doesn't hold, it breaks to the downside, but then we have divergence. Okay, on these short time frame charts. So it fails to break and close under, and the more time it hits this point of support, okay, the more likely it is to reject it and move again to the upside. So going back into short time frames, okay, we want to look for engulfing patterns. So we've got one here. Okay, we haven't got one here. And then we get these inside bars here, which shows indecision again. And then we've got our bullish outside bar. And the way that I use these to try and build positions on the way back up, okay, with the view. Like I said, I don't scout very often, but I just scout in these consolidation periods, okay, is I then look for the bias to change. So the bias, solid support, we break above the 50 RSI, and then we use these levels, okay, inside bar, breaks to the upside, outside bar, okay. We use these levels to bleed this trade back to the upside. But here again is the top of where 70% of today's price action is held. And you want to be wary of any signals that basically denote that this market is getting exhausted to the upside. And of course, this, as soon as we get this here, okay, it's a lower high, okay, it's an engulfing bar, okay, and the market moves again to the downside. The EMA is a 15 EMA and a 62 EMA. Basically, I'm quite fanatical about fib levels, and the 62 EMA is as close to 61.8% as I can get. So I'm using it as support and resistance. Really, until we get a breakout and a clear breakout of this range, okay, 125.98, 125.74, then all we're getting is a consolidating day, okay, and we can see that by the range, okay, where market profile, okay, is showing that smart money, okay, is happy for the currency pair to trade around these levels. Like I say, I am bullish. 125.85. I'm long at the moment, so it is starting to go in my direction. But I really need to see a break at this level now, and a solid break to move back up. If I do move back up, then this level here, 126.27, is my first area to target. Okay, so we're just going to take this off for a second, and don't all think that this looks highly complicated. Take these lines off that I put on earlier. Okay, so as I said, market profile, and I hope you can see that. Can you still see that, guys? Yeah, the highlighted candles in yellow are basically what I look for. So they're outside bars, inside army bars, morning stars, evening doji stars, and it's automated. So it's just easier visually to be able to see to be able to see where it is. Okay. So what we've got here, we've got the market profile chart, and you can see that this was the range yesterday, and every letter is a different half an hour. Okay, so we've got this level 126.24, which is a point of control from yesterday. Okay, and then we've got 126.54, which is point of control from the day before. Okay, from Friday. Now this level here, or this range here, this is the double distribution day. Okay, so I'm just going to remove those horizontal lines. Okay, so this market moved up, consolidated around this area, and then it moved up into this area here, and this is what they call a double distribution day. This is really a non-trending day. Okay, virtually inside the range where 70% of price action ended on Friday. And you can see here that even though we've broken out of this range this morning, we know that we've got support around this level, okay? Because this is where price action was rejected yesterday, okay, 125.64, and it's the start of this area where smart money is happy to see price action on Friday. So move back up, move back down, but reject the lows, okay, and then this area becomes support And what we need to see, market will attract back towards the point of control. So let's just remove the splits. So today's point of control is 125.82, and at the moment we're trading 125.90 odd. So we've just moved back above the point of control. And what has a tendency to happen is the market, until it can break away and up through these levels, okay, where 70% of price action has been the previous day. Sorry. It'll have a tendency to just trade around these points of control. Any questions about market profile, about how to use it for scalping? It basically shows us where no, market profile's not CQG is not free, I'm afraid. And that's basically how I use it to on a day-to-day basis to try and scalp. You can use it in larger time frames. Okay, this is a daily market profile, and this will show you where higher time frame support and resistance is. Okay, so here 124.89 denotes that there's good support around that level. Okay, resistance around 127.42, and then if we move through there, then obviously 129.72. So it's not just a day trading tool, but most professional bank traders that use it will use it as a day trading tool. Okay, it also can be used in larger time frames. And what we have here as well down the bottom, okay, is what we call a single print. So that denotes that market, it's like a spike on a daily chart or a weekly chart. So that denotes that the market moved down to this level. But if we see a single print and a single print gets rejected, I think we need to do far more webinars on market profile. Let's just remove these horizontal lines. Okay. What will happen if we get these single prints? The market will have a tendency to move back up to the point of control, and that's in all these different time frames. So we haven't got any single prints, no single prints here, etc. We'll probably look for some in different currency pairs, but that's not really what we're looking to do. Okay, any questions about market profile, about how you can use it to produce intraday scalps? Remember, I'm not just pulling the trigger with it. What I'm looking for is I'm looking to trade with my bias. So my bias is to the upside. Okay, it hasn't breached that 125.52 level. I think it's a corrective period, and I'm still looking to take longs. Okay, I am a trend follower. Any questions? No. Okay, let's just get rid of this. Yeah, I know what you're saying. The chart, as a standalone, the chart analysis will hold up. Okay, it's just an added extra. I don't have a tendency to always trade around the market profile charts, but what has a tendency to happen is that if I get confluence of these areas, then it's sort of a double whammy effect, if you like. I.e., here yesterday, okay, I've got this point of control here, but I've also moved underneath my moving average, so I get a strong rejection to the upside. I move back through the point of control. Okay, then it comes up to retest not only the point of control, but my EMA. And at that point, I'm looking for short time frames, like I say, a 5-minute reversal bar to try and take it to the downside. It's only when I get candles that show me that the downside is potentially exhausted that I then look to reverse my short-term view and take it to the upside. And I don't just trade off swing trades. I have weekly views, which I'll trade in a smaller amount, intraday moves, and then scalp moves. So I've got all these different tools, if you like, in the bag for different market conditions, trending markets, non-trending markets, and obviously double distribution days, which you said. Let's just put the camera off for a second because it's flashing like mad. One thing I will say, somebody's just said, can we look at sterling yen and sterling dollar? Yep, we can. I'm going to look at euro sterling first because I also want to have a bias, and I know this chart looks a complete mess. In fact, I'll get rid of a little bit of analysis off this chart. I want to get a bias, so if I think that we're going to get dollar weakness, I want to buy sterling dollar or euro dollar, then I don't want to necessarily be buying both pairs, and I want to get a bias off euro sterling to tell me which pair I should be involved in. Okay, this is my euro sterling chart. Let's just get rid of some of this. Okay, I've got fib on here, down towards 261.8%, 78.96. I don't think it's going to get there. I think we're actually in a choppy corrective sequence to the upside. Last week's candle, pin bar, and we rejected this level 80.45. Now we really got to get back above that level to get bullish again in this pair, or properly bullish again in this pair. Daily. Now this was a corrective channel that did nothing, quite some time. Okay, just got chopped around inside, and then it broke, and it used this area here, okay, this solid support area, okay, to reject. And also this was Friday's price action. Now we've had quite a decent reversal yesterday, but as long as price action doesn't break yesterday's low, I still think the bias is to the upside. Now we've got some heavy cloud cover, which we've mentioned a few times. So it's rejected the EMA, and it's just penetrated that heavy cloud cover, but it's been unable to get inside. I do think we're in for another corrective pattern to the upside, but I'm expecting it to be quite choppy. Just get rid of the cloud again. Where are you? Okay, but what we have got here, and this happens a lot, okay, is we have these trend lines, and what will happen is we'll get a breaker trend line, and then it will come back and retest. So here you can see on the 26th, it broke to the downside, came back, retested, and then we moved down to this area of support. Now we moved up, broke this descending trend line up into the cloud, and then we've moved back, and we've rejected this trend line support. So That's what all the mad lines are everywhere. This is my level, okay? This is 80.45. Now this has been an area of support and resistance, and I do need to get over that area. But I think what we're at least going to get in the short term, okay, is a free wave correction, maybe up to 80.45, and then I'll watch price action around there. So out of the two different currency pairs that I want to trade, if I want to get short of dollars, then for me, I want to be taking euro dollar longs, not sterling dollar longs. Okay, and I've also got euro yen that has a bias to break to the upside. So I'm using the different correlations of the different currency pairs to try and pick the best one to take me higher. Okay. Let's just get that off. Going back to cable. And I've got my areas of support and resistance. It rejected lows last week, ended quite bullish. Let's just put my pivots on. Okay, so here I've got my pivot level, okay, coming in here that's held quite well. So I want to put, again, a horizontal line onto that level. So just talking about big pictures, okay, I do break things down, especially at the end of the month, into large time frames. And this is just one big, this is the monthly chart, this is just one big consolidating triangle that needs to break in one direction or the other. Now, I know the bias from May is strongly bearish, but it refused to break and close beneath this upward trend line. So it's skewed again to the upside. Weekly chart, okay, again is skewed to the upside. Daily. Now this is where obviously my support and resistance levels come in. If you notice here, we just rejected. So we're looking at 1 hour time frames when it off the daily chart, okay, at these support and resistance levels. And then it's moved back up and it rejected again yesterday. So I think it's got a bias to move down, but only towards this level, okay, only towards 156.13. So I then want to break down time frames. And remember, I'm looking for I'm looking to trade with a trend. So if I get down towards these levels, then that's when I'm going to start building long positions to the upside. So I've got 156.13. Again, using fib retracement tools. I want to see if anything lines up around that level. So I've got 50% here, okay, 156.06. So I know that I've got a decent area of support down here. What else do we have? Well, we've got previous support, okay, broke, then became resistance, broke, well, it was resistance for the time being, then resistance. So this has been pivotal, okay, 156.13 in price action for the last 2-3 weeks probably. So we can expect it to be pivotal on the way back down. Now, shorter time frames, small wedge formation. I don't think it looks great. Momentum is falling off, or strength, RSI. Okay, it's breaking through the 50 level now, but it's not aggressively low. Okay, we've got the insider army here that didn't break, but I would, instead of taking shorts, as I said, I'd prefer to watch price action, because I think it's going to be choppy as well if it's a corrective pattern. I prefer to watch price action moved around down towards this level, this 156, sort of 13, 156 the figure level, and then look for reversal patterns here. Okay, look for insider army patterns or outside bars. We're actually forming an outside bullish bar at the moment, so you can see that we're getting conflicting views in this choppy price action. You can tell as well, just from market profile, that the ranges are tight, okay? Especially today, 70% of price action has been between 157.03 and 156.87. So a very tight range for cable, and I don't think you're going to get much out of it if you do trade it today. Sterling yen. Sterling yen's not one of the currency pairs that I cover. But I am pretty bullish on yen pairs, short term at least. Okay, outside engulfing bar from Friday. Where did she move down to? Let's just take that off for a minute. Take that off. Again, 1, 2, 3, 4, 5 times she's used that exponential moving average as resistance, okay? And then she used it as support yesterday. Now, what was yesterday's low? Yesterday's low was 124.32. What was the Marabuzo level from Friday? 124.30 and a half. So again, that's when I put on my horizontal lines to show where support and resistance is, and then break it down through time frames. And here we've literally picked perfect into that Marabuzo. I didn't buy it. Like I say, it's not really a currency pair that I like to trade too much. I think if anything, cable's got a little bit more to go to the upside. Just trying to get a good feel for it. With this just being a small correction today. And move up there, I think. A reason why I don't like sterling yen, well, it's got wide spreads normally. It's very volatile. As you can see here, a 1 hour move to the downside is pretty aggressive. Euro yen I prefer to trade because the spreads are much cheaper. I think just from experience of this, it's not my favourite pair really. You know, I don't particularly like dollar CAD. I like Aussie dollar. I like Aussie yen. I like Euro yen. I don't like sterling yen. It's just, I'm not superstitious, but I've never had particularly good runs on those currency pairs. So there's enough to choose from out there. I prefer to concentrate on the others really. Any questions? And today, obviously, this move lower, if it is a fourth wave correction, okay, just notice how it's really not moved away from the point of control at all. Okay, so we've got solid support here. 125.03. I mean, you can't really, you know, I trade off chart patterns and, you know, outside, inside bars, etc. This gives out so many different signals, and aggressive ones as well, that by the time I get in and I've paid the spread, it never seems to bleed, if you like. I want currencies to bleed. Now I've got an outside bar here. moves back down, but then I get a massive engulfing bar there, which should sort of off the point of control, which should indicate that it's going to move higher, and then it comes back down, and inside bar breaks here. You're not getting much out after your spread, especially on this one. I mean, if anything, I'd look for reversal patterns around this level, and look for this just to be a very choppy corrective pattern, really. Any questions? Can I give an example of using Fibonacci to predict trading trend on sterling dollar? This is something that we noted in our analysis. It was actually for the Friday frenzy. We managed to get long in cable, and we were just aware of this fib retracement. Okay, so we've got 50% level here, 61.8. So looking for patterns, again, hourly charts. If I'm looking for a trigger off a daily chart, then I'm looking at an hourly chart to give me that trigger. If I'm looking for a trigger off an hourly chart, then I'm looking for a 5-minute candle to give me that trigger. If I'm looking for a trigger off market profile, then I'm looking maybe down to 1-minute charts to give me that trigger. So the triggers in different time frames, I wouldn't expect to get a 5-minute pattern here that will really hold. I have to get it in larger time frames. So this was 50. Okay, and this was 61.8. I can't actually remember what level we bought it at. We bought it on the pullback. There's no decent reversal candles in there, and even off the 240-minute chart, there's no decent reversal patterns. This is highlighting an inside Arami candle, but for me it's not, because it's actually taken the low of the previous candle. I can't remember, going back to Friday, which is quite sad, about what actually triggered our long trade. In fact, I think it was over here. Yes, it was. So we waited for the trend to change, and then we used fib again. Okay, so the trend had changed as far as we're concerned. We moved up through the RSI. Okay, we went bullish. We got above our moving averages, and then we took it here. We actually took it before we had this inside bar. So we'd had an aggressive move up, and then we looked at retracements and confluence areas. Okay, so we had 50%, which was one of the reasons why we got long. So we've got the 50% level here. Okay, we've got market profile showing that this was the point of control from the day before, and then we get an inside bar. So we get 3 reasons around that level to pull the trigger and to get long, because the bias is to the upside, and this is showing indecision. This is showing that the market doesn't really want to move any lower, and that's, the more you can get to back up your view, the better. And obviously there we had 3 different things. Okay, we had a bullish bias on the RSI, as I said, an inside Arami, we had the moving averages, and that's for me, that's enough to get long. But you've got to constantly, you can't be blinkered in currency analysis. You've got to constantly try and decipher what's going on. Where are the points where traders are happy to see price action? Where are the fib levels? What sort of patterns are we forming in different time frames, daily, 4 hourly, even going down to into 5-minute charts? If it breaks your area of support, does it hold? Does it move through it? Or does it just reject it? I mean, I will have points where I don't want to see currency pairs go through, but I will also wait a lot of the time until the close of that 1 hour candle to see whether or not that level gets rejected, because a lot of the time it'll push through, take out some stops, and then move back to the upside. So a candle is not complete until it's closed, and that's why I don't think you can. I think you have to day trade really to be successful, and I don't think you can just put on trigger levels and go off and do your day job, because a lot of the time the market will spike through those support and resistance levels and then move back in the direction that you thought it was going to go in. Any other questions at all? Because our time is now up. So I think next week might do a whole webinar on market profile, or we might not. It depends how many people register for it, obviously. We do post market profile charts on our analysis, so even if you can't get market profile on your chart package, we will show you point of control and where most of the price action was the day before, and I think you will find that used properly, it can be very beneficial to your day-to-day trading. Okay, any questions at all? No? Okay, guys, well, thanks for attending. I wouldn't call that a dive, really. It's just moving off the move. It's just coming off the moving average. It's just chopping around inside here, and this is obviously one of the problems with scalp trading, is that you will just get these nasty sort of intraday corrections, really. And again, it's just moving around the point of control. It's not broken out of the range. The 5-minute chart looks horrendous. That's right, Mike. Like I said, as long as it doesn't break really through this morning's lows, and even if it does, I'd look around 125.50 for higher time frame buy signals, really. Okay, Adina's just telling us we've time to wrap up there. So I hope you enjoyed it. We're hosting another webinar next Tuesday. Good luck with your trading, and I hope to speak to you soon. Okay, guys, thanks very much.